Hi, everyone. I'm Ian Heller with Distribution Strategy Group. Welcome to this special program, Inventory Planning During Uncertain Times. We have a great panel of guests that I'll be bringing in a few minutes. But first, we need to do just a little business so we can pay the bills. So I'd like to tell you first about our upcoming conference, Applied AI for Distributors 2026. It's June 23rd through 25th at the Chicago Marriott O'Hare. You can go to appliedAIfordistributors.com to register. Please register soon. This program will sell out. We are bursting at the seams at this facility, and we have quite a program lined up for attendees, including how to use AI today. That's why it's called Applied AI for Distributors. This is not a meeting on how AI will transform society. It's a meeting on how AI will transform your distribution company. We'll have more than 40 AI-enabled distribution technology companies talking about everything from quoting, CRM, pricing operations, customer service, inventory management, supply chain, rebates management, returns management, you name it. If it's about AI for distributors, it'll be there. And we have 3 special workshops. The pre-show workshop is the future of AI in distribution. We have 2 post-show workshops, including building your AI roadmap and building AI agents. You're not going to want to miss this. This is the 4th annual conference, and we've seen the conversation shift from what is AI to how do I use it to build competitive advantage. Someone from your company really should be there. We have a great lineup of speakers, including the Dana Stone is the SVP of Marketing from Graybar. We've got the CTO from Grainger. We've got the SVP and Chief Experience Officer from ADI Global, the President of Summit Electric Supply, the owner and CEO of Select Auto Parts and Sales, who's doing some really innovative things with AI, along with Jeff Kroom, who's a distinguished, easy for me to say, distinguished engineer and PhD in cybersecurity from IBM. Matt Sigelman will be talking about how AI is impacting jobs. Alex Chalsofsky, our favorite economist, who will be talking about AI in the economy. Brian Hopkins, who's our COO and a world-class LLM expert. It's going to be quite an event. And of course, Nick Pericles, who's a friend of the company, who'll be doing the AI Agents workshop. You're not really, you just can't miss this, in my opinion. It's really important to embrace AI at least as fast as your competitors do, and hopefully faster. And this is the only major live conference on AI for the distribution industry. Okay, got to tell you a little bit about our software products that we developed. When I say we, it's my business partner, Jonathan Bine, who's developed a Distributor RX software suite. Customer Experience RX is a Net Promoter Score software for distributors, but it's unique in that it gives you a true picture from your customer's point of view on how you're performing across the enterprise, everything from customer service to delivery to sales rep performance, inventory performance, pricing, you name it, we ask about it. And then we actually benchmark you against other distribution companies, which I don't think anybody else does. Then Employee Experience RX is an employee engagement product so that you can get that same MRI from your employee's point of view. And then Demand RX helps you estimate demand by location for customers and prospects by the way you segment your world and by your product lines using your data appended with a bunch of data that we bring. There's nothing else like it in the market. It's really good stuff. So if you have an interest in these products, make sure you go to distributionstrategy.com/software. All righty. Let me bring in our panel. I'm so excited to have this really experienced and smart group of people to talk to today. We've got Greg Hartunian, who's the Director of Sales with Epicor Software, Kim Glasscock, who's Director of Order Management at Proficient, and Rupal Deshmukh, who's the Partner of Strategic Operations at Kearney. Hey, you guys, thanks for joining us today. I really appreciate it, and we're going to have a great discussion, don't you think?
Absolutely.
Looking forward to it.
Fantastic. Okay, so Rupal, I'm going to start with you. We're going to do a little background Q&A here. So why don't you tell us a little bit about your career, what you're doing today, and tell us about what Kearney does too.
More than happy to. Thank you, Ian, for having us here. So Rupal Deshmukh, I've been with Kearney for almost 15 years now. I came in with a couple of years of experience in the industry. The heart of what I do is help supply chains operate more efficiently. And I like to frame it as my passion project is likely turning complexity into chaos into clarity. Right? I was making sure you were listening there, but that's what I'm most passionate about, right? Turning chaos and complexity into clarity. And we've had a lot of that in the supply chain space over the last several years. My firm, Carney, we've been around for almost 100 years. Strategic operations and supply chain transformations is the heart of what we do. We're a global firm, it's about 6,000 people, and we help corporations on topics areas like setting up the right network structure to operating their supply chain and planning processes much more efficiently. So I look forward to covering that over the course of the next hour with this group.
Terrific. Thank you. And Kim, why don't you tell us a little bit about your
Hi.
background, what you're doing today, and about what Proficient does?
Yes. Hi. Thank you. Yes. I'm the director of order management and strategy within Proficient. Proficient is a consultancy and services type firm. It's all focused on AI first. Um, we have a lot of core, partners that are all out in industry, like we all know and work with. I'm mainly focused on supply chain around I'll say the execution side. I have a lot of industry practical experience, practitioner. So I really understand business processes. So that's where kind of my bread and butter is. But around order management, integration with transportation, systems, as we are looking more today with, you know, estimated due dates and transportation cost differences. So do a lot around the execution systems, primarily focusing on order management.
Got it. Great. And Greg, I know you've been you had your own company for a long time, and now you're at Epicor. Why don't you tell us a little bit about what you've done over the course of your career, what you're doing today?
Yeah, thanks a lot, Ian. Yeah, my name is Greg Hartunian. I'm the sales director at Epicor Software. Been with Epicor 2 years, worked with Epicor for well over a decade. And my responsibilities now are helping our customers make better decisions about their demand and lead time data to optimize the inventory investments to ensure that the ERP, our core ERP solutions, are driving effective order suggestions as a consequence of the planning. I was formerly the CEO of Smart Software. That was a business that was founded in the early 1980s. We became part of Epicor 2 years ago, and they've inherited all of our employees, all of our tech, and we're working very closely as part of the Epicor ecosystem. It's a great company supporting distributors with purpose-built ERP systems for distributors and a host of other strategic applications that essentially round out anything you can potentially do within business, whether it's predictive planning, whether it's product information management, whether it's CPQ for configuring products. Like we do a lot. So, but my focus is squarely on inventory management, inventory planning, forecasting, and I've enjoyed doing that for really my whole career. So, looking forward to
Yeah,
that.
and sorry. So when you look across, Greg, when you look across the distribution landscape, how would you describe where most distributors actually are on the planning curve? Not really the early adopters, but where's the middle of the bell curve in terms of their planning capabilities?
It's a great question. I think what we see in terms of the planning capabilities, it tends to be every distributor that we encounter tends to focus on trying to predict demand. They tend to
Yeah.
focus on trying to build policies to protect against the uncertainty, like a min or a max or reorder points. But they do tend to struggle in that. So what we see, the middle of the bell curve is reliance on averages. So my average demand,
Right.
and then reliance on the intuition of a planner to subjectively buffer that average to protect against demand and supply variability. And then that often follows kind of a reactionary change when a problem happens. So if we have stockouts, the planner or the business may get concerned and then they may reassess certain items, reorder points, and bump them up. Or if they
Right.
had to write off inventory, they will then reassess certain items, policies, and bring them down. So we tend to see a lot of focus, attention being paid to inventory,
Yeah.
but the middle of the bell curve, I think there's a lot of room to improve beyond rules of thumb, intuition, and averaging based methods that tend to rule with most distributors.
Got it. And Rupal, I know you've led supply chain transformations from some of the largest companies, but also all kinds of companies and all kinds of industries. So when you look at the wholesale distribution sector specifically, where does it sit relative to other industries in terms of planning sophistication, and specifically where are they behind? I think you're muted, Rupal.
I would say that overall, the wholesale distributor sector is at the medium to low level of
Yeah.
sophistication. You have a couple of players like the Cisco's of the world that are very advanced, right?
Yeah.
They use real-time demand signals, right? What Greg said was spot on. It's basically that most people are using very average and rudimentary techniques using Excel, very simple calculation methods, but the very advanced players are much more in touch with what is reality, and reality doesn't live in averages, right? It lives in actual data elements. Where distributors are fairly behind is in looking at what, like taking demand and actually integrating more real-time signals into the mix. And I'll pick Cisco's example again, but Cisco actually gets data on what restaurant orders are looking like, right? As soon as you integrate that, you have a much more powerful demand signal and you can flex your inventory based on that. So I think overall, it's really about going from very static and simple planning to more advanced. And I think there's different, you're not going to jump from very simple Excel based models to integrating AI in like a couple of months, right? But it's about integrating more real time signals and bringing more granularity to your forecast as you develop, as you advance your capabilities.
Got it. Okay. And Kim, from a systems and implementation side, when you walk into a distributor engagement and you look at their order management and fulfillment stack, where does inventory planning immaturity or lack of sophistication show up operationally? And do you find that that's a data problem, a systems integration problem, or process problem, or all of the above?
I'd probably say all of the above. I think I'd
Yeah.
probably put the underlying concern would probably be around the process immaturity. I think we see static inventory policies, manual handling. A lot of times, some of the planning cadences don't match the demand volatility. So, from an OMS perspective or an execution system, a lot of times that will cause lack of trust with what the inventory on hand is, or the availability to promise, or the lead times. And so what we end up doing is what we see from the OMS perspective is it may be that we're over-promising, or we're having to do more partial split shipments because we don't really have that true inventory, view, and we're not getting more real-time triggers. They're usually in some kind of batch mode from planning systems. They're not like, real-time changes that we can update those signal changes for.
Yeah, and that creates the kind of chaos and complexity that
Yes.
Ripple was talking about earlier,
Yeah.
right? I'm sure you see that manifested in the order management.
Yes.
Those are the consequences, right? Okay, so Greg, I know you've been a champion of probabilistic forecasting for a long time. For the audience that's used to thinking about inventory in terms of, hey, my forecast says I'll sell 10 a week. Explain to us why that deterministic approach breaks down, especially for the large share of SKUs that don't follow like a normal distribution demand pattern.
Sure. So first, like most distributors, you don't have the benefit of just stocking a small subset of parts that sell a lot, right? You have to stock tens of thousands of parts that have very intermittent demand, many of them. So what we typically see is 70 to 80% of a distributor's demand is intermittent. And you're just not like a demand forecast for an item that has very unpredictable, spotty demand with random spikes is really not going to be that effective in helping you optimize inventory. but if we just back it up a level to like what a forecast really is in the first place, it's an estimate of the mean expectation. It's not a statement of obviously what will happen, and what does happen is going to be higher or lower than that forecast. So by itself, even if it's really accurate, right, is not enough as an input to inventory control. So, Kim mentioned it, Rupal mentioned it. Companies will often take a demand forecast, even a pretty well formulated forecast, and they use that forecast and they multiply that forecast. So if I'm forecasting 10 a week and my lead time's 4 weeks, I say, all right, I'm going to keep at least 40. And then I come up with some other multiple on top of that that's just arbitrary, right? So
Right.
so we need to move from beyond just a deterministic prediction of demand. And by that, we mean a one number prediction over time
Yeah.
to thinking to incorporating into our inventory decision making what we do on a day-to-day basis with most every decision we make. We think probabilistically, whether we're going to the airport and we're estimating how much safety time to add before we go, when we set our alarm, in the morning to get up to deal with traffic, going to commute to work, whatever the case is, we think probabilistically. We need to bake that into our inventory models, and instead of predicting 10 a week that even grows to 20 during a seasonal period, etc., we want to actually know what's the probability for each possible outcome that could happen, right? So what's the probability demand will go to 50? What's the probability it'll be 0? So what's the probability for each possibility? And when we can simulate all of those outcomes, it's not about getting the forecast more accurate. It's about using all of the rich simulated possibilities to then stress test your inventory design. And then we can literally identify where there are failure points. Failure points being too much, failure points being not enough.
Yeah. Yeah. No, when I was at Granger many, many years ago, someone told me there are two kinds of inventory forecasts: wrong ones and lucky ones. And
Right. Yeah, but the thing about what you can do with I think we got to redefine what like a good forecast means, right?
Yeah.
Like a good forecast in the context of inventory planning is predicting the upper tails of the distribution. In other words, I want to know as an inventory carrying business what I need to carry to cover me a certain percentage of the time. That number can be forecasted fairly accurately if you have the right set of simulation tools. You're never going to forecast. Getting an accurate forecast of the mean expectation isn't that helpful because there's still a wide range of values that can happen around it.
Yeah.
Right?
Yeah. Good.
That's-
Okay.
yeah.
And by the way, the audience, please jump in with questions if you have them. So, Rupal, from your experience leading network optimization and cost transformation, how does this shift from deterministic to probabilistic planning change the way companies think about their supply chain networks? I mean, does it change where you hold the inventory, how much, both?
It changes all of that. And I'll maybe if you were to reflect on the world that we live in right now, right? 3 to 5 years back, there was a lot of talk about supply chains needing to become resilient, meaning that you needed to have optionality in your network, right? COVID
Right.
brought all of that.
Right.
And at that stage, it was thought that, okay, it's more episodic, like this volatility that we had in the market. But we're now in an environment very quickly because of tariffs, because of the recent outbreak of the war, where volatility has become structural, right? So it's no longer that it's like, oh, it's volatile now or it's a more risky environment now. It's just structural. It's base case. So the companies that are winning in this environment are mastering like a scenario planning capability. You don't plan for just one outcome. You have a couple of like bookend scenarios figured out at an enterprise level. And then you have plans cascading from like the C-suite down to like the executors for those different scenarios. And what we're seeing in this environment, going back to your main question around how is inventory positioning changing,
Yeah.
we're finding that companies are planning for the base case of the inventory, like whatever is the current environment, but having like the right plans developed for the scenarios that are most probable, right? So if you're getting very heavily hit by tariffs from a certain country, you're figuring out where are your next sourcing options and getting those supplier partnerships developed so that you can activate them at like in a couple of weeks' notice if need be. So that is what good looks like today, right? Recognizing that like volatility is now structural, investing in the right scenario planning capabilities, and then having your solutions planned out for the scenarios that are most probable.
Right, and now
Yeah.
let me add to that too, because you had mentioned it being like like the uncertainty we're facing is now kind of base case,
Right.
and so when we think about like traditionally, like 10 years ago, maybe not, yeah, like 10, 15 years ago, there was a lot of attention on, well, we need to remove these outliers. When we're predicting our demand, we have to strip
Yep.
that's an outlier, that's an outlier. And I think to your point, Rupal, like if the uncertainty is the base case now, like, or lots of uncertainty with or even when we're in pockets of calm, we always know something's around the corner that could just disrupt, right? So
Right.
the beauty of the past observations of these random spikes from COVID, from everything we've been dealing with, um, is that it introduces uncertainty into the data sets. And normally we're afraid of that, but we actually should
Yeah.
embrace that because we now have a rich set of data with all of these extremes, ups and downs, that we can then simulate from so that we get a more realistic future simulation as a consequence of those spikes. Because we
And
can
I,
always, yeah, go ahead, Kim. Sorry.
oh yeah, sorry. I was just going to add that we also see this with some of the distributors that we work with, even disruptions like the weather. Like there's certain times of the year that certain regions, could have storms or hurricanes or whatever. And there's can be a big difference if I normally get it from Florida and I now have to go across many regions, and there's going to be different transportation costs, different cycle times to get that, estimated due dates. So we've seen a lot around disruptions, even around things like the weather. So I think the whole scenario planning is very key because we know that's going to happen in certain regions where there's certain distribution centers that typically would fulfill certain types of orders, and they can't do that for those kinds of reasons.
And again, that's not to suggest that we're trying to predict the weather. Like we get a lot of customers that
No,
come to us and say,
yeah, no, absolutely.
I know, but
But
we will get that. Well, well, if we're talking about weather, can we predict it? The idea is we don't know what it's going to be. That's why it's important to simulate all the
yeah,
possibilities and then adjust.
exactly.
Yeah.
Yeah, exactly. That's my point, is being able to understand disruptions. And if you have some of these quite a bit, you need to understand what those are and how you can do that.
So Kim, let me pick up on that thread for a minute, because really what we're talking about is that the planning layer is moving from a single forecast to a distribution of outcomes, which is why they're talking about this scenario planning and the bookends that you mentioned, Rupal. So what does that mean, Kim, for the order management and execution systems that are downstream? I mean, does the OMS layer need to change to accommodate probabilistic inputs, or is this purely a planning side shift?
I feel like it's primarily a planning side shift. Planning's understanding some of the risk awareness, the inventory sizing, safety stock decisions, those kind of things. And so obviously some of that ripples down into the execution
Yeah.
systems to be configured and managed a little bit differently. But the execution systems like need decisions, like am I going to accept or reject an order? Am I going to promise a date? Like we can't like say there's a 62% chance we're going to ship something, right? It has to be a decision, not
Yeah.
probability. So I think this kind of highlights a little bit of what I mentioned earlier about the timeliness for getting those changes, triggering event alerts, all those kinds of things are going to be really key for an execution system to understand those changes in planning systems.
Yeah, and speaking of certainty in data, Greg, a lot of distributors brag about high service levels. They'll say things like, "Hey, I'm 98% service level." A lot of times that's you can measure service level in different ways, right? Is it the whole order? Is it line service level, et cetera? Or sometimes it's not really grounded in data at all. So how do you get a company to address that gap between their claimed or perceived service level and what's really happening?
Yeah, that's a good point. I think the key is what is the definition that you're using, and I've even found that within a company, different constituents and stakeholders are using different definitions of
Yeah.
service.
Right.
So, what does that really mean? Like if I'm at 98%, but every time a customer places an order, the customer service rep says, "Well, I don't have it now, but I can ship it in 2 weeks." And the customer says, "Okay." Does that count? Did I go one for one? Or
Right. Right.
did I not ship it same day? So I think it's really important to measure how often you ship from the day of the order, or when they placed the order, did you ship, and have the flexibility to extend your customer lead time and measure service over varying customer lead times so that you
Okay.
can really be on the same page. So if someone says, what is our service level? The question should be then, well, service level over what customer lead time? Is it a service level
Right.
over same day, next day, 48 hours, a week? Like which is it, right? And then we can be really clear on what we mean by the service level and then incorporate that definition into our planning inputs so that we're reconciled. We often see, like, when we implement like our technology for optimizing the stocking parameters, customers will often say, "Well, your order point to hit the service level of 99% seems way too high. We're getting 99% today, and we're much lower than that." But then we dig into the definition a little bit that they're using, and their definition gave them like 3 weeks to deliver.
Yeah. Right.
So it's
Right.
we have to make sure we're speaking the same language when we define service level, and the measurement needs to be really crisp as well. But the good news is the data that's in your ERP typically will capture that. Like, what were your
Yeah.
sales orders on what date, and did you have inventory on hand on that date?
Yeah.
That's pretty basic. So as long as we set up a reporting layer to show that, we have you can have a historical artifact of how well you're physically doing.
Yeah, got it. Okay. Hey, Rupal, I know you spent your career helping companies restructure supply chains and operations, often in response to disruption. So it's pre-acquisition, clean teams, post-merger, logistics optimization, network redesigns. But the current tariff environment is unprecedented, I think, and it's forcing distributors to rethink sourcing, inventory positions, and cost structures all at the same time. So, do you have a framework that you recommend that distributors should be using to make these decisions?
Yes, I do have some guiding principles in this environment, right? The couple of things here would be define your objectives or outcomes very clearly. And when I say that, it may sound a little bit generic, but where I'm going with it is if you know what are the big swings that could happen, you can actually plan for what are the objectives you want to hit as a part of that, right? So what we're seeing really strong companies do in this environment is having like a tariff impact modeling capability, right? And that
Okay.
sounds like a tool, but not making changes too quickly because we know the tariff news is changing on a regular basis, but having the capability to evaluate that fairly effectively. I've seen companies stand it up in a matter of weeks, and then they have like a tariff war room ongoing where you're actually seeing, okay, like what could the impact be, right? The second part of it is around, I'm going to go repeat back what I said around like scenario planning, being able to effectively evaluate, like based on the bookends of tariffs I might end up experiencing, which products are going to be impacted, how much could the cost scale by, and then determining the strategies accordingly. So it's really, if I have to like summarize it, one is having that tariff evaluation capability built out so that you're actually evaluating what the impact could be.
Yeah.
Second is having your scenarios or actions developed, because there's actions you can take to mitigate costs internally by changing sources of supply, or you could pass the costs on to customers. And then taking the last piece of it is taking actions in a way that you're being extremely sensitive about how you're communicating them to suppliers and having the ability to change them as well, right? Like I had a very like I had an automotive parts distributor company that we did work with last year, and they had a situation where a whole bunch of tariffs were announced to change. So they made changes. Then in a couple of months, some of those changes were reversed back, right?
Right.
And that last part around how they communicated to customers saying that, hey, like, we're monitoring it. Here is what we're doing to change costs. And then if the situation changes, we will be taking action. And they did take action. And it was almost like it was a moments that matter kind of moment, right? Where the customers truly appreciated the transparency and the ability to be able to flex back. So it's a volatile environment, and how you deal with your customers and suppliers in this environment will actually shape like future years and decades. So those would be the three components that I would look back to.
And when you're helping them understand the dynamics of something like tariffs, and then they have to consider things like reshoring, nearshoring, diversifying their supplier base. I assume you help them model the total cost implications rather than just the pass-through cost of the tariffs.
Absolutely, yeah, because you have to look at that's a very, very good tee up, right? The way to model it is you're looking at the impact to your cost of goods sold. You're looking at the impact of your transportation cost, your warehousing cost. You're also looking at the impact of what it takes to, like, the legal dimensions of it, right? What does it take to change your importer of record? So it's very much a total cost view.
Okay.
And in addition to that, the other factors that you consider are what is the risk and resilience impact? That may not be always modeled in the form of cost, but certain
Right.
situations are more or less risky than others. And then lastly, you have the working capital impact as well of carrying the inventory
Sure.
in different places.
Got it. Okay. And Greg, when potential cost increases of 10 or 25%, because things are changing, on imported goods are combined with unpredictable timelines, what do you advise distributors do on the planning side? I mean, is it changing safety stock? Is it shortening your planning horizons? Was there something else?
Yeah, it's about reassessing, given the new climate and the new inputs, whether you still want to strive to hit those service level targets that you previously were focused on. So my current set of planning parameters, maybe it's a min of 20 and a max of 30, might have been ideal and might have driven a 99% service level at a cost of $50,000 a year for a given product, right? But now with the tariff impacts, I need to resimulate what is it truly going to cost me to achieve that service level, given higher unit costs, more variability in the lead time, likely having a longer lead time now, right? So I now need to reassess how much is it going to cost me to hit that same service level, right? And maybe it's going to cost double to hit that same service level. So as a consequence, I have to accept a lower service level because I can't afford it. So it's really not like what is the action you should explicitly take when you're faced with these sorts of decisions, but rather having the framework in place to be able to riff and make decisions based on changing data. And if you have that framework in place, then look, costs change for a lot of different reasons. It could be tariffs, could be just a massive price increase. It could be scarcity. It could be a whole variety of reasons. Simulate that and then reassess your risk tolerance, because your appetite for risk is impacted by how much you're willing to pay to offset that risk. And those things can change. And then you can communicate to your sales team, your customer base, look, my service level on these items is going to drop. I can't guarantee you because of the cost. And then you can have a conversation. Maybe they're willing to pay you more, and you can a higher price. And then therefore you can afford to keep that same service level. But it's about constantly reassessing as the data inputs change.
Okay, and Kim, I want to follow up or focus on the execution side with a couple of questions. So first of all, when tariffs cause distributors to front load inventory, because I think that's a pretty common reaction, or shift suppliers, which is a more dramatic solution, what tends to break in the order management and fulfillment process, and how do you keep that operational layer in sync when the plan is rapidly changing?
Yeah, I do think that's kind of a stress test for OMS and fulfillment execution systems because they're changing the inventory intention faster, and
Yeah.
we don't necessarily aren't able to handle it, say, in real time. So ATP and promise integrity starts coming into risk because we would kind of assume all the inventory is fair game, and so then you start over promising.
Yeah.
A lot of times what we see a lot of our clients do is you have to start kind of asking the questions like, what part of the front-loaded inventory is sellable versus protected? Are there certain customers we want to shield from that? Is there demand that could be delayed without really hurting a relationship? Or when do we look at like preferred service over the margin? So there's a lot of things like that that kind of start playing an impact into the execution side.
And what's interesting about your point there too, Kim, is
Yeah,
like that when these issues happen, this is exactly like what you just described is
yeah,
exactly why you can't just turn on a forecasting system and start sucking data in
that's
and
right.
start using it, right? Because when you have like okay, so you've got demand from a customer, but you may not want to ship that customer that demand because you're trying to allocate it for a more important customer because of the
Yes,
scarcity. So then you can't necessarily use your historical shipment data, right? So
that's right.
part of the thing that we try to always educate is this is a lot more complex. I mean, it's something that's manageable, but you have to put work into doing it. You
Yes,
can't just hook up a system and suck the data in and start
right.
planning. We have to assess the demand signal, which is your
Exactly.
shipments, your sales orders, your returns, and that demand signal may need to be adjusted based on what you just described. Like
Right.
I'm not shipping to this customer, and so that my shipment data is not an accurate reflection. But there's ways you can address that at the data level to make it
Hmm.
more whole and more complete. Kind of the holy grail of inventory planning is knowing true demand.
Right.
But there are ways we can get there. But work has to happen on both sides, from the technology vendor and the customer, to try to reconcile where these situations occur. So I'm glad you brought that up on the allocation. It does make a difference.
So let's switch the topic to AI. You may have heard of it. Um, so, Rupal, I'm going to actually start with you. I know you advise a lot of Fortune 500 companies on operations innovation, and you lead the Carney Innovation Study. So, based on all that research and work, where are you seeing AI actually deliver measurable value in supply chain planning? Not experiments or pilots, but actually in production. And where is it still mostly aspirational?
Demand sensing is a very powerful use case that companies have been using for a couple of years, right? So it started
Right.
with more ML. AI is enabling you to pull in a lot more signals. So for those that are not familiar, right, you have what demand sensing is looking at your all of the market indicators, like Kim mentioned, weather, right? You might have social media posts that actually impact your demand in some way as well.
Hmm.
You might have like local sports events that are going to impact your like restaurant orders in a specific area. So what demand sensing is basically about taking all of those market indicators that are likely to affect your demand and sensing what that ends up doing. So it doesn't replace your demand planning by any means, but a lot of companies, I'm sure Epicor does this as well, but a lot of software companies have integrated that into their toolkits, and I've seen several clients use that very successfully. The area where there is lot more hype than impact is around planning agents. So I know a lot of companies are, a lot of the chief supply chain officers that I talk to are hearing a lot of different claims around what like agents can do to help like the planning process, but that hasn't truly come to fruition yet in what I'm seeing. So that's very, very new. So what I see happening is a lot of like the manual calculation related work being done extremely well by systems and being better powered with AI to generate initial insights, but it's not going to replace what human intelligence does at the end of it. So it will make the job of planners far more interesting. And it'll make it should be about taking away as much guesswork as possible so that you can actually be much more strategic with what you're doing.
Got it. Okay. And Kim, on the implementation side, what do you see that separates the AI powered tools that actually get adopted from the ones that aren't, that sit on the shelf? And are there some common characteristics of deployments that seem to stick? They have legs?
Yeah, I think the ones we're really seeing more on the execution side would be kind of more, I'll call them policy-driven promises, not like the model-driven one. So you're helping like reduce a lot of tribal knowledge dependencies or all the hours spent stitching a bunch of reports together or maybe escalation noise, something like that. So things where like for inventory, being able to like, AI works well for like classifying risk and behavior for inventory or helping with prioritizing or optimization of inventory, things like that. So things that we don't see a lot of success in yet would be like having AI actually do the order promising for you in an autonomous way and like
Right.
it setting the promise dates or those kind of things, trying to balance it itself. It's really more to help and provide, structure and guidance, decisions and thresholds like that versus actually autonomously making changes.
I love that. I'm seeing a lot of that as well. I think it's more
Yeah,
about aiding the planner as
yeah,
a co-pilot or like as a assistant to enable a decision, but not going out and autonomously making it. I'm sure we'll get there for
yeah.
stable parts of your business where demand is more predictable and you can create like the right safety and guardrails around it, but not seeing as much of autonomous as
Yeah,
well.
we're just not seeing that yet. I know a lot of people talk about it, and it maybe, later down the road, but yeah, it's right now it's really more, what we just talked about.
And Greg, I mean, you and I talked about this recently, but it feels like you think forecast accuracy has some practical limits, right? You can't predict demand better than the data allows, and AI is not going to make that dramatically different. I think is am I characterizing your point of view correctly?
Yeah. I think just that even an accurate forecast, because of the variability of demand and then obviously variability of supply on the lead time, is very limiting in terms of optimizing like an inventory. It's a critical, don't get me wrong, it's a
Yeah.
critical input. It's the starting point for your planning process, but by itself, it is not sufficient to properly optimize inventory across a supply chain network, particularly in a multiple warehouses, DC, a multi-echelon environment. So I just caution businesses against fixation on trying to squeeze forecast accuracy out of data that's just messy. And even, and the other piece is accurate compared to what?
Yeah.
So many like initiatives, there's no comparison against a base case or a control. So, and even when customers complain that their salespeople aren't being accurate with their forecast, I always ask, compared to what? Have you generated a forecast that's just an average, and are you proving that the average is better than what the salespeople are saying? If not, then you can't say the forecast is inaccurate. We always have to have a comparison. But I guess the overarching point is that the we always want to endeavor to get the best possible prediction we can for demand, but that is not enough. And I think like what we can do with AI is now plug, to Rupal and Kim's points earlier, we can plug the many scenarios into an inventory model to stress test the design of the system. And
Yeah.
then and by doing that, we can then identify where the problems are likely to occur and take proactive action to correct those problems before they become an issue. So focus less on how much accuracy we can squeeze out of the item or out of the whole plan, and more on how we plug many possible forecasts with many probabilities for each forecast occurring into our inventory design. Order points, order quantities, lead times from the suppliers. That's the design,
Yep.
right? So
And Greg,
So
I'll even
so
add,
go
oh,
ahead, jump
sorry,
in. No, no,
even
no.
just quickly on those plans that you're talking about, even quite a while ago, people were doing integrations with the execution systems, like they were doing plan updates quarterly, and then they started doing weekly. And we go in now with some of our clients, they're not even sending an integration with demand planning to feed an order management system, for example. And so you're losing any kind of somewhat real time information, even if it was weekly. I mean, we're not, some people don't do that. So we look at a lot of that first when we go in. That's some, simple things, if you will, that we have to have those demand signals as well to be able to accurately do fulfillment in the way that it's supposed to be done.
Yeah, 100%. And if your execution system is littered with outdated or inaccurately computed
Yes.
reorder points, then the output of that execution system is going to be fundamentally flawed. And then you get this bias towards, well, my ERP system is broken, I don't trust it. Well, no. It's the inputs to that system, right? Like we're automating. Our execution systems are effectively automating, right? But it's automating based on the inputs that are defined. So yeah, if we can update those planning parameters as often as is reasonably possible, and technology allows it to do that often, but also more importantly, more accurately. In other words, we're not just automating a rule of thumb, right? We're not just automating an average. Then the output from the execution is going to be cleaner. It's going to be more accurate. It's going to be more trusted. And then you're not having folks just kind of run away from the core execution system and doing their ordering in Excel, right? And then creating another data silo over there and then no one knows how to unwind how we got there. So yeah, it's updating frequently, updating with the right set of tools, I think is critical, right? So yeah, good point.
Hey, Rupal. I know you work a lot with, cost transformation and margin transparency, but when you're working on supply chain strategy with a company, how do you get finance and operations, and I suppose I should throw in sales, aligned around, inventory economics? What data or frameworks actually move that conversation forward?
And is the alignment around what are the objectives, or is it more around how you set up the supply chain design and outcomes?
So I'm thinking about, supply chain economics in terms of what's our service level target, what's our working capital performance target, because sales will say things like, oh, you can't sell out of an empty wagon, and then the PE owners are saying return on invested capital is really all we care about, which is not a growth measure, right? I mean, you can drive up your return on invested capital and shrink your company, right? And the salespeople are like, hey, you can't give me an 18% sales growth goal and try to go from 4 turns to 4.7 turns in the same year, right? So I mean, having worked for a lot of distributors and around a lot of them, I mean, you just get these conflicting objectives. And people just see different pathways to profit, and they're incentivized differently.
There is no alternative to quantifying the different options you have, right? And I have seen that operations is uniquely positioned because it's almost like a in between of what commercial is saying. The outputs are evaluated by finance.
Yep.
So what I've seen work is like a central mandate, and there may be different things that you're trying to solve for. You may be trying to solve for what are in your objectives need to be, right? You may wanting to be solved for, hey, like for the next 6 months, what should our supply chain design look like?
Yeah.
If you're solving for, like if I take the supply chain design example, what I've seen companies do is say, okay, like we have these 3 alternative networks, right, that we could consider over the next 2-3 years. You may find that, okay, like I could have a couple of DCs here in the US, I could have 2 DCs here in the US and 2 in Europe for global supply. But the right way to do it is to take like an enterprise level view of what the impact of those different solutions might be, right?
Yeah.
So it's about looking at what is the total cost of ownership, which is everything from the cost of goods sold, the tariff impact, transportation, and warehousing. It is about looking at the impact to working capital. And for our sales friends, it's really about evaluating what are the bookends of sales that you can meet with the different solutions, right? And at what lead time. Those are the core parameters, and then like just to sort of synthesize it, right? Total cost, what is the impact to working capital, what is the impact to revenue and resilience. And resilience could be defined in different ways for different companies, but those are sort of the four big buckets that I would typically use to bring the right group of people together, because I think those speak to everyone. And bonus points if you're actually able to take your scenarios and model them into margin impact, right? That's not hard to do. But the more operations talks in terms of what is the impact to the customer and margin, the more people listen. I think if we're talking the language of just OTIF, it's very hard to bring everyone along. You have to take that and translate it into metrics that pretty much everyone's bonuses are tied to.
And Kim, do you have a framework for getting sales operations and finance aligned around shared inventory KPIs? Are there specific metrics that you've seen work better than others for creating shared accountability?
We do work with clients. A lot of it's trying to understand more about, inventory allocations, like assigning specific amounts of stock in different locations, sales channels, customers. So we are involved in that to some degree around that. Probably not as much, obviously, as planning would be, but we are involved.
Okay, and let's start. We've got about 5 minutes left before I need to wrap up. So let me do some closing questions. Greg, if a mid-market distributor is watching this, and like a lot of them, they're still running on spreadsheets and intuition of the buyer, what are a couple things they should do to get better at planning in this particular environment quickly?
Well, I think, look, you've got to, the thing you can do to get better is first identify what kind of problems you're having, like, and get alignment organizationally on the size of that problem and the immediacy to fix it now. And, I would start looking at your technology vendors and start asking, how can you help me solve this problem? You're not going to get better in Excel, right? Like, and there's never necessarily a good time to do it. So start engaging, start asking the right questions and ask about practical applications of, forecasting and AI, right? Like, keep it simple at first. You don't have to go to doing demand sensing all at once. You can start doing statistical forecasts of a given item, right? That's better than doing an average, as an example. So start small, and be prepared for ongoing engagement from your team, because you have to keep reinforcing these principles, especially if you're used to planning in spreadsheets, used to updating a min-max every quarter instead of doing it continuously, right? So it's a process change. But I would start having conversations with your technology vendors and asking them, because ultimately they're spearheading the innovation, right? Like, innovation on how to forecast better, how to optimize inventory, how to make a better ATP is not coming from the business who sells widgets, right? It's coming from the tech vendors. So have a conversation and see where it goes.
And Greg,
Kim,
go ahead.
No, please.
I was just going to add, along with, I totally agree with what Greg was saying, but also we've seen with a lot of clients that we help that you could even start simple. You don't have to address like all your SKUs. You could take like the top 20, 30%, maybe by revenue or pain points, right? Maybe just pick a couple of critical distribution centers, figure out some buckets of segmented inventory and the timing. Like, you could start like operationally with some small, don't try to tackle everything. And we've seen some success with that, kind of operationally as well, in addition to the systematic approach.
Absolutely.
And Rupal, for companies that are ready to make a more significant investment, either their network redesign, their technology, their operating model, where should they start? Where are they going to get the best return on their investment?
I think about it as like a two-path approach, right? You need quick wins to fuel your transformation
Right.
and momentum and give you value, and then you also need the long-term shifts. A lot of companies will see more benefit from the tech and operating model shifts in the near term because those are easier to influence depending on how you classify technology, right? So if you're doing sourcing as an example, and if you have ways of sourcing differently, you can drive very quick impact to your company. That would be
Yeah.
the place to start. But what you really need to do in parallel, going back to the fact that volatility is now structural, you do have to look at your network design for the long term as well. Because it is another time where you may need to shift drastically or at least evaluate options drastically. So doing that two-pronged approach, you're building momentum and thinking about your long term is what I would recommend.
Got it. Okay, good. All right. Well, I am going to wrap up here. We're going to talk about a couple of our upcoming programs. So if I could get the audience to hold on for just a minute. We have our regular program, AI News and Gurus, on April 7th at noon Eastern, 9 a.m. Pacific, with Brian Hopkins, our Chief Operations Officer and world-class LLM expert, Brooks Hamilton, who runs AI Strategy Advisors. And our special guests are Steve Javor, who is the head of digital customer experience and e-commerce for Schneider Electric in Canada. Really bright. We talked to him many times. Steven is a great guy. And then Jonathan Meyer, who's a senior solutions engineer at HawkSearch by Brigline, which is an AI-enabled search tool for distributor websites. And then on April 15th, tax day, we have How Distributors Use Analytics to Drive Sales and Profits with Emma Houghton, who's the commercial director on demand for the Yoda.ai. So a lot of AI coming up. All right, so Rupal, Greg, Kim, I hope you enjoyed the discussion. I certainly did. I learned a lot. Thank you so much for joining me today.
Thank you.
Thank you.
Thank you. Thank you.
Thank you.
All right.